Despite a rocky start to the year, Bitcoin experts remain optimistic about the currency's future, believing it will eventually reach a value of more than $100,000. At the start of the trading day on Monday the 28th, Bitcoin was trading above $47,000, its highest level since March 2nd. As a result of the Federal Reserve's announcement earlier this month that it will raise interest rates for the first time in 3 years, as well as President Joe Biden's new executive order on Bitcoin, the cryptocurrency market is now experiencing a surge. Ultimately, researchers believe that this will lead to improved stability in the cryptocurrency market. So, is the crypto market on the rise again? And will Bitcoin break $60,000 before June? Hey there, and welcome to Crypto Cash channel. In today's video, we are going to take a look at the price prediction of Bitcoin in the looming all-time high. But first, before we go, a sub to the channel would be very appreciated. Make sure to comment, to share the video, and don't forget to leave a thumbs up for the video. Let's get into it. Recently, as a result of Russia's involvement in the Ukraine conflict, Bitcoin has recently experienced increased volatility. Experts fear that the conflict will continue to inflict damage for the foreseeable future. Bitcoin has barely been above $45,000 for the preceding 3 months, and it hasn't been above $50,000 since December 25, 2021. The cryptocurrency, which hit a 6-month low of $34,000 in late January, has managed to hang on to its recent advances. When compared to its all-time high of $68,000 reached in November, Bitcoin's current worth is a long cry from that figure. But despite the present decline in the value of the asset, it is still worth more than twice as much as it was 2 years ago. However, Bitcoin's ups and downs are nothing new, and they are expected. The general consensus is that Bitcoin will ultimately achieve a value of $100,000, notwithstanding the present price decline and extreme volatility. However, different people have different ideas about when this will happen. According to a new study conducted by the German banking behemoth Deutsche Bank, 23% of Bitcoin investors believe the cryptocurrency's price would reach $110,000 in 5 years' time. But still, because of the volatility of cryptocurrencies, new crypto investors should exercise extreme caution when devoting a part of their portfolios to them. Over the years, the value of Bitcoin has increased in a similar manner to the value of any other cryptocurrency. It's fair for Bitcoin investors to be concerned about how far the currency will be able to soar in the future because Bitcoin's price, in contrast to the prices of more established asset classes, cannot be anticipated with any degree of precision in advance. In addition to supply and demand, public mood, media coverage of market events, and scarcity, coin values are impacted by the same traditional economic variables that affect all other currencies and investments, such as inflation, interest rates, and inflation expectations. And because the crypto sector is a new and emerging asset, its value is impacted by a greater number of factors than the value of traditional cash or equities. There are currently 19 million bitcoins in circulation at the moment, and minting will end when the total number of bitcoins reaches 21 million. Experts in the cryptocurrency sector regularly point to the inherent scarcity of cryptocurrency as one of its most compelling selling points. For example, Lightnode Media president, Alexis Johnson, described the situation as having a fixed supply but increasing demand. And according to some analysts, the value of Bitcoin is derived from the fact that people value it. Adding to this is Nelson Merchant, co-founder of Johnson's Lightnode Media, who believes that the psychological aspect is really the reason why everyone's buying the coin. But because buyers would be willing to pay a premium for a limited number, even if a product was previously unavailable, the law of supply and demand continues to hold true. In the opinion of Waltman, one of the most important factors driving the rise in the price of Bitcoin is the rate at which new clients become aware of and research cryptocurrencies. People are embracing crypto technology at a faster rate than humans were first adopting the internet, as she puts it in her article. If this tendency continues, the growing value of Bitcoin may be pushed further higher by the compounding acceleration of new adoption, which might result in a further increase in its value. According to data from digital asset management business CoinShares, the popularity of Bitcoin has been increasing at a rate of 113% every year since 2011. At the same time, just 63% of the population had access to the internet. It is predicted that if people accept Bitcoin at the same rate as they did the internet in its early days, there would be 1 billion Bitcoin users by 2024 and 4 billion users by 2030. According to a study published last month by CoinDesk, an estimated 66 million new wallets were created worldwide between January 2020 and January 2021. Bitcoin exchange Coinbase claims to have 73 million members around the world, while Gemini, another popular exchange, recently released its State of the United States Crypto Report, which claimed that 21.2 million Americans own Bitcoin or a cryptocurrency of some kind. However, one of the primary causes contributing to Bitcoin's recent price decline, according to industry analysts, is hawkish government regulation. According to CoinFund managing partner Seth Gins in a recent interview with CoinDesk First Mover, the Federal Reserve adopted a hawkish position on cryptocurrency regulation. In turn, this raised concerns about cryptocurrency's viability as an asset, resulting in gloomy emotions in January 2022. The regulation of cryptocurrencies presents a plethora of difficulties that have yet to be resolved. President Joe Biden signed into law an infrastructure measure that requires all cryptocurrency exchanges to record their transactions to the Internal Revenue Service, IRS. Earlier this year, Flourish, a fintech platform for financial planners, published a white paper in which it claimed that the regulatory policy debate is patchy. The fact that cryptocurrencies are such a new asset class means that any new law may have an impact on their market capitalization. When China banned cryptocurrencies in September 2021, the price of Bitcoin plummeted, but it has since risen and resumed its normal range of fluctuations. And also, despite the fact that the SEC's strategy for mainstream crypto adoption has been in place for more than a decade, the agency continues to make all of its decisions on an individual case-by-case basis. In addition, a cycle known as halving has a substantial influence on the price of Bitcoins in general. A stage in the Bitcoin mining process known as halving, despite its sophisticated and mathematical nature, is a step that decreases the compensation for mining Bitcoin transactions in half. And with the halving of the Bitcoin supply, the rate at which new Bitcoins enter circulation is slowed, which has a knock-on effect on the value of present Bitcoin holdings. In the past, halvings have been associated with economic booms and busts. And so, financial advisors and other industry experts caution investors against making investment choices solely based on fluctuations in the price of Bitcoin. Dollar cost averaging is a technique employed by investors who make monthly contributions to passive index funds and exchange-traded funds, ETFs. According to experts, a set it and forget it method is appropriate even in the case of cryptocurrency. Cryptocurrency price estimates are based on data collected over a period of around 10 years, and the value of Bitcoin varies greatly from day to day. And because of the volatility, it's challenging to grasp the what and why of your crypto strategy. And as experts notes, they don't think people understand how to value Bitcoin across a broad spectrum of applications. In order to decide whether or not to purchase something, you must first determine the value you expect to derive from it. And so, it's feasible to say that financial advisors should not be concerned by cryptocurrency if a consumer has an interest in knowing more about it. Even if you have no plans to utilize cryptocurrencies, you should consider if you really need them as an investment. But the common belief is that Bitcoin ought not to be used as a means to reach your objective and that the average consumer should prefer uncomplicated, easy-to-understand investing techniques. The benefits of doing so include staying on pace with your most important financial goals and putting yourself in a better long-term position for clear judgment. And that's it for today's video. Thanks for watching. Do you think that Bitcoin and the crypto market, in general, are on the rise again? And will you place the investment when you have a chance? Make sure to comment below. Let's engage. Also, if you are interested in more videos like this, make sure you like this video, share and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. See you in the next video.